What's going on, guys? Hope everyone's having a good weekend so far. Making a quick update video going over Friday's price action. Nothing about the outlook of the previous week has changed. This video is going to be pretty repetitive, just touching on all the charts I've been showing you for the past week. One thing that I do want to mention is that I think the bottom is now in on AMC. It looks like the bottom's in on AMC. We actually broke the micro resistance to the upside, closed above it on Friday. And that is pretty much that. With that being said, I'll just jump into the video. If I can click on anything, here we go. So kicking it off with SPY, as I usually do, which is extremely bullish. If you still at this point do not think that the market is bullish, I don't know what you're looking at. I don't know what charts you're looking at. You're probably not looking at charts. If you at this point think the market isn't bullish, you're not looking at the charts. What you're doing is looking at the news. And I've mentioned this a million times. The news does not make decisions for the market. The market makes its own decisions. The news justifies those decisions that the market makes. Inflation, fucking World War III about to erupt, the banks, everything. It's all just bullshit in the news to paint the narrative that, we're going through bad economic times, which we are, but that has nothing to do with the market right this second. The market is bullish right now. Very, very bullish. So with that being said, here's the macro on SPY. Descending broadening wedge, 1 year downtrend, broke it to the upside, tested on the breakout, confirmed the test, found a bounce off. On Friday, we saw a gap up from the previous close on Thursday around 421, 422. We saw a gap up to 424, more green from there, and came all the way up to 429, pushing towards that 430 resistance. This looks very, very good. Golden crossing the daily, day 46 or 40, I think 46 in a row, closing over the 200. Very, very bullish. Nothing is bearish about this chart. Nothing is bearish at all. The market is very bullish right now. The news, fuck the news. I don't know how many times I have to say it. If you think the market's bearish right now, you're not looking at charts. You're watching too much fucking news. So with that being said, it's a different outlook on the macro on SPY. 4 hour with extended hours. Here's the descending broadening wedge. Here is the breakout of the descending broadening wedge and the retest, and then the confirmation of the retest and the bounce off. I mentioned this last time as well. The descending broadening wedge we saw in SPY for the past year transitioned into an ascending triangle, which is a bullish pattern. So multiple rejection points off the top resistance of this ascending triangle at the 418 level, and then we have our support down low. A few breaks below, it's fine. Had a few breaks above on the upside as well, but this support on the bottom is very strong. Here's the breakout of the descending broadening wedge here. Tested again. Broke below, confirmed it, reclaimed the triangle, and then got pretty tight here, a tight range towards the end of this, and we recently broke out. That right there is a breakout. So SPY has broken out of both macro patterns that it's been trading in for the past year. The descending broadening wedge broke to the upside and retested. The ascending triangle broke to the upside and arguably retested. I'm going to get into that. I think there's still a chance we come back down to 418. It's not definite, but it is a possibility. So looks very good. I mentioned last time as well, we have some areas of resistance to be looking out for overhead. The first one being this 429 and change, 430 level roughly, which we came pretty close to on Friday. The high of the day on Friday pretty much came right up to that resistance and got knocked down from there. From there, we're going to be looking at 438, 450, 458, and then 470. Once SPY cracks 470, that's it. It's off to the races and it's seeing new highs. Seeing new highs anyway, but 470 is the last resistance point that SPY saw pretty much, before the highs. So that 470 range, once we cross that, that's it. So nothing is bearish about this chart at all. I don't know how many times I have to say it. This looks very good. This is a very bullish looking chart. There's nothing bearish about this chart whatsoever. It looks great. The market's bullish. I touched on this as well. This move on SPY is very symmetrical. This bottoming action on SPY is very symmetrical, starting with this blue box here. You have a cup here. You could ignore this last pop above right here, as this was going to happen regardless to test the macro. I touched on that in one of my videos as well. So The blue box would be your middle, where you have your lowest low. Actually, you have your highest high in this range as well in this pattern. Into the red, you have a cup here that I have a horizontal line drawn at 380. So as you can see, both red boxes dip below the horizontal line at 380. The blue box even further than that, the lowest low. From the bottom on both red boxes that you see, you come up and reject the 418 level, that very important 418 level that I've been talking about. After you find this bounce here off this low around 380, you reject 418. Same thing on this side, reject 418. From that rejection, now into both of the green boxes, reject 418 and come down and bounce perfectly off of 380 in both. So here's your rejection here, 380, find a perfect bounce there. Here's your rejection over here, and then here's 380, find a perfect bounce there. From there, you climb back up to this 430 range, which would be this section right here. And this is why I'm mentioning that it's possible that we see some volatile chop on SPY, maybe this week, maybe all this week. We see some volatile chop on SPY in this area, coming up and down, bouncing in this range from 418 to 430, as we saw back here. I mentioned the move is very symmetrical. I would not be surprised to see that happen. That's what happened back here, the first rejection off of 430, and then you have all this chop here in this range between 430 and 418 before you break through, and then the next level resistance you're looking at after that is 450. So this move is very symmetrical. You can see it by the horizontal lines I have drawn. Both red boxes dip below this horizontal line at 380. The blue dips the furthest below, and both green boxes bounce perfectly off of it. And then the upside, all of them are rejecting off 418. Besides this pop through right here to test the macro, the descending broadening wedge, and then the green boxes when you finally break through the 418 level and hit 430, and you're chopping in this range between 418 and 430 before you break through, and the next resistance point we'll be looking out for is 450. So it's possible we see some chop in this range for a little bit. Once we do break through this range and break 430, you could expect to see 450 relatively fast. This was 2 days from 450 to 425. So when this finishes up, maybe we just pop right through it. Leaning more towards we're going to see some chop in this range for now. But it is possible that we just straight line this to 450. I don't think we will, but it's possible. So that's pretty much that. The move is symmetrical. SPY broke out of both of its macro patterns to the upside. And golden cross on the daily, 46 days in a row closing over the 200 EMA. There's nothing bearish about this chart whatsoever. Nothing. There's nothing you could say bearish about the chart. If you want to, you could bring up the news and all that shit, but it's irrelevant. I mean, I don't know how many times I have to say that. You know, we can go to fucking World War III tomorrow, and SPY is going to continue ripping to the upside. With that being said, the market sync that we see now. Here's SPY on the left. Both macro breakout patterns here, the descending broadening wedge and the ascending triangle, broke both of them to the upside. That's a macro breakout. The ascending triangle was a macro breakout. The descending broadening wedge was also a macro breakout. Broke both of the macro patterns to the upside. At the same time, AMC has broke its macro pattern to the upside. This is a macro breakout on AMC. I'll get into that later on. I've already touched on this and why I believe this was the macro breakout for AMC. And then the previous 4 weeks from this breakout, we've been in the retest, getting dragged out. Very, very long time retesting here, but I'm pretty sure the bottom's in now, and I'll get into that in a little bit as well. Pretty much what I'm showing you here is that the market is synced up and is bullish, and everything looks good. SPY is going to be seeing new highs, and the meme basket is about to squeeze once again. So that's that. Macro on AMC, nothing changed here. This green, red, and blue 3 fractal sequence here that led up to the squeeze in January 2021 is playing out again from the breakdown of the flag from the June highs, reset back into this pattern and tracked it perfectly the whole time. I mentioned the only difference here is that this was flat and this is descending, but it's playing out the exact same way, and we are at the end. So that's the macro. Jumping into the macro zoomed, I showed this as well. This is exactly what I was just saying, except without the bars now. Here's the green, red, and blue, the green, red, and blue, and then you have your June squeeze, your January squeeze, your June squeeze there. So this blue box here is right here down below, and this blue box here is right here down below. So the blue box back in January 2021, which this is what led up to the squeeze in 2021, is the same thing that we're in right now. This is the on the macro. This is what we're tracking right now. This is where we are in the macro. So this one is down right here down below. Now this is like a day or two old. I haven't updated this yet, but it doesn't really make a difference. This pretty much the point here being this resistance line drawn from the top of the blue box straight down over your tri-peak. The tri-peak from your first bottom, your tri-peak rejects off of that resistance. Then you come back down to double bottom with a slightly lower low. Same exact thing we saw here. So our first bottom, our tri-peak, which rejects resistance, and then you come back down to a slightly lower low. From there, you form an uptrend, which breaks you out of the macro, as we did, and then you retest, and that's where we are. We're in the middle of the retest now. So that's pretty much that. Macro volume. So this is my macro perspective once again, and just showing the volume profile. Not going to get too crazy into this. Pretty much the point here being that the levels of volume that we're seeing right now are comparable to the levels of volume we saw back in January and June on both squeezes, which is very good, as we're expecting another squeeze relatively soon. So, I mean, you could really see the shift in behavior of the volume profile here. Very, very low all the way through this. You get the pop at the absolute low that you see here, and then volume starts picking up comparably to what we saw back here. So that's the volume profile. Now, getting into this, and this is very important. I've showed this all week, so I'm just going to touch on it again. This is just showing this is the blue box of January 2021 on the left, and then this is the blue box of our present cycle where we currently are today. So from the start of the blue box, drawing a trend angle down over your tri-peak where you get rejected, all the way down is where you find your breakout, and that trend angle is minus 42 degrees. On the right side now in our current cycle, the exact same thing here from the start of the blue box, drawing this trend angle down where you find the rejection of your tri-peak, and you also find your breakout and retest as we did back here. On the bottom, from low to low, from the lower low to the first low, 176 degrees in the 2021 cycle. Over here, lower low to the first low, 178. So pretty much the same trend angles up top and down low. Bottom to bottom, 176 versus 178. Top to bottom, minus 42 degrees in both. So here's your first bottom, tri-peak, second bottom, lower low. First bottom, tri-peak, second bottom, lower low. Uptrend breaks you out, and now we're in the middle of the retest. This retest here played out very symmetrically and was flat. I mentioned this in my last video as well. It's a very symmetrical move. It's more or less a W with chop in the middle here. The W here, you confirm your retest and just get a straight line back up to the top. Very symmetrical move with a slightly higher top on the right once you confirm. I mentioned this in my last video as well. This was flat and this is descending, which should not be a surprise because on the macro, this was flat, and what we're trading in now is descending. It's tracking the exact same way, except this is descending. This was flat, this is descending. So it makes sense that our retest would be descending because we're descending and we're not flat. So that's that. Now, having said this played out symmetrically, I believe this move is going to play out symmetrically. So I think the bottom's in now, and what we can expect now is to play this move out the exact same way to the upside that we saw to the downside. So we should see a pop to 520, trade sideways in this range from $5 to 520 for maybe a week, as we saw here, and then you get the rest of the cup to the upside. So this would play out as a symmetrical move, like that, with a double top slightly higher. So that's that. This looks very, very good. Very, very good. Honestly, there's nothing you could say bad about this either. There's nothing bearish about AMC. There's nothing bearish about the market at all in general. There's nothing besides people that are just completely exhausted from being in this play and just think that, oh, we're never going to squeeze because it hasn't happened yet. There's nothing bearish that you could say. The market is bullish. Both times that AMC squeezed, January and June, SPY was rallying to the upside in a bullish position, and that's where it is now. So it looks very, very good. That being said, jumping into the breakout and the retest on a smaller time frame now. So on the left, you have January 2021, your bottom, your uptrend that breaks you out, and then your retest. I also mentioned that the support and resistance of our current cycle is a lot more tighter than it was back here. It's a lot more compacted. So the movement that we're seeing is a lot more tighter. It's different. It looks different, but it looks similar, but slightly different. And the reason being is that the support and resistance that we have which I just showed you here, is a lot tighter than what we saw here. Look at the size of the tri-peak here compared to what we saw here. The support and resistance here is very, very tight. So that's why this looks different. It looks similar, but it looks slightly different. Obviously, and I mentioned this multiple times as well, it's never going to look the exact same way. It's going to look similar. So that's that. Now into the breakout and the retest from your bottom in 2021, you find an uptrend, which breaks you out of the macro. Before you break out, you actually reject and form a U-type pattern here, which we did here, same exact thing. So you break above, you get the rest of the upside there, as we did, and then you get into your retest. From the breakout, you come down to your first low, which breaks you back underneath the resistance, as we did. This took some time to get to our first low. This was pretty much instant here. So we come back to our first low, which breaks you below the resistance, and then you form an uptrend, which breaks you back above the resistance, which we did. Breaks you back above the resistance. From that uptrend, you break back down below the resistance, which we did. Multiple bounces here that came below the resistance, but found a bounce and closed above once again. So this looks very, very good. This retest that we've been in from this breakout at 620 here, we've been in this retest testing the macro breakout for a full month, 4 weeks now in this retest. So, and we're holding up. I mentioned in my last video as well, we've only had 1 or 2 closes below this resistance line. It's mainly just been chop on it, and you saw a few breaks below, but always reclaim it, and that hasn't changed. This whole week we saw a few wicks below the resistance, but we closed above it every single time. So it looks like to me that on Thursday we confirmed our retest. That was the confirmation, and then Friday was relatively flat, with the exception of a slight pump and a flag after hours that we saw at 7 p.m. If you know, you know. It looks like the retest is confirmed here now. So with that being said, jumping into this. Now, I mentioned the last time as well, when you break out, you have an overhead resistance that's pinching us down into a descending wedge now. So this white line would be our macro resistance, which so fucking annoying. The white line is our macro resistance, which we rejected from the U pattern, same as 2021, I just showed you. Then you break above it, you get the rest of the upside that breaks you out, and then we're in the middle of the retest now. And we saw a few breaks below this resistance line, but always claim it. This is the 4-hour, by the way. This is a full month from breakout to where we closed on Friday of retesting a macro breakout. And I also mentioned that we have this overhead resistance, a micro resistance, that is keeping us pinched down to our retest of the macro, which we actually broke above on Friday. We saw from Thursday close to Friday open, we saw a gap over it, came back down, tested it, and closed above the micro resistance that we've been rejecting this whole time. Very, very bullish. This looks very good. So this is zoomed in on the 1 hour now, just showing you exactly what I just showed you. The U pattern that you get, that breaks you out. You get the rest of the upside up, which you find the start of your micro resistance that's pinching us into the wedge. Reject from there, reject off of the micro here, come back down, bounce off of the macro, bounce off the macro again, a few wicks below, break below the macro, reject it, come back into it, come back above the macro, flat there, reject the micro again, reject the micro again, reject again, reject again, reject again. Come back down, find a bounce, reject again. Come back down to the macro, find a bounce. Come back down, reject the micro again, come back down to the macro, bounce, bounce, reject off of the micro again. And then Thursday into Friday pre-market, we broke above. We saw a slight gap up, broke above the micro resistance, and then all of Friday's price action was testing on the breakout of the micro resistance to the upside that we've seen. This is a month. This is a month of testing a macro breakout and a month of this overhead resistance that we have on the micro. We just broke out of it Thursday and Friday. Thursday gapped up, broke above. Friday completely flat, testing on it, and then we saw a slight gap up after hours, a flag at 7 p.m., which, if you know, you know. If you're in my Discord, you know what I'm saying here. It looks good. So this is very natural looking as well. You could see this very natural price action here. But yeah, that is a confirmation of our retest, and then a break above the micro resistance that we've seen for the past month and a close above. I'm expecting that the bottom is in here. This looks like an inverse head and shoulders. Here it would be your head, and then here would be your two shoulders. This looks like an inverse head and shoulders. We held up on the macro resistance. We broke above the micro resistance, and we're forming some higher lows now. This looks very good. I'm expecting that the bottom is now in on AMC, and that next week we're going to start climbing back up to the upside. Now, this could play out one of two ways. I've touched on this as well. So one or two ways that this can play out is, that we have just confirmed our retest. We could just see boom candles straight up to 650. It's possible. I don't know how likely it is, but it's definitely possible that we could gap from here. We could gap up. We can get boom candles up to 650. This can play out a few different ways, but I'm leaning more towards it'll play out symmetrically. As I've mentioned in my last video as well, the OPEC states, there has to be some significance there. Maybe there's not. Maybe it's a coincidence. I just don't think so. So the next OPEC state that we have would be late June 27th or 28th, I believe. More than likely, what's going to happen here is that this retest is going to play out in a very symmetrical fashion as it did here. So it could take 2, 3, maybe 4 weeks to climb back up like this and get to 650. More than likely not 4 weeks. I would probably lean more 2 or 3 if it's going to play out slowly. But it's also possible that we just start seeing boom candles. And once again, fractally speaking, what we have left is we broke out. We got all of this price action. This is the blue box on both sides once again. So let me just make sure everyone's following. Here's my macro perspective up top, and then we're just going to start zooming in slightly. Here is the green, red, and blue here, the green, red, and blue here. So this blue box that led up to the squeeze in January 2021 is down here. And then this blue box is where we are now, is what we're tracking, which is right here. Now, this is what I just showed you. This is the blue box that led up to the squeeze in 2021. This is the blue box of our current cycle now. So we got our first bottom. We got our tri-peak in the middle. We got our second bottom with a lower low. And then you have the uptrend that breaks you out of the macro and the retest. Same thing, we got our first bottom, we got our tri-peak, we got our second bottom with a lower low, we have an uptrend that breaks you out of the macro, and we're in the retest. Trend angles are the same, minus 42 on both sides, 176, 178, pretty much the same thing on both sides. It looks slightly different, but it looks very similar. Fractals repeat themselves in a very similar fashion. That's how it works. It's what the market is. It's repeating fractals over and over again. So fractally speaking, what we have left, because in my opinion, we confirmed the retest Thursday, Friday, what we have left is this pump off of the retest. So the retest confirms here in 2021, and then you bounce off of it to a double top, slightly higher, and then you have a gap over your tri-peak, and then you have a straight line, which takes you to your squeeze. So we confirmed the retest here, in my opinion. That was the bottom. That was the confirmation of the retest. We should start climbing back up to a double top, as we saw back here. Slightly higher, so I would guess maybe $6.50, $7. From there, you gap up to the top of the tri-peak, around $8 or $9. And then from there, it's a straight line into your squeeze. So fractally speaking, we don't have a lot to play out, and the market is synced. As I just told you, SPY has broken both macro downtrends, not macro downtrends, but both macro patterns to the upside. The descending broadening wedge broke and tested, confirmed, and bounced to the upside. The ascending triangle broke to the upside as well. So the market is bullish. This is important because both squeezes on AMC that we saw, SPY was in a bullish position and rallying to the upside. That's pretty much it. I think I touched on everything I wanted to touch on. Next week, I'm expecting to start climbing back up. I'm expecting that this downtrend that we saw for the past month, this retest, we're going to start finding our way back up. It more than likely will play out symmetrically and will be slow, but it is possible that we just fly to the upside from this retest. So that's pretty much it for the video. All my charts that I wanted to go over. Somebody in my comments on my last video asked me a question, 2 questions, so I'll go over them now. I've noticed that the three colored fractal zones end at the squeeze, meaning the squeeze is not part of the repeating fractal. So should we really expect the squeeze to play out the same as the past if it's not part of the fractal? That's a very good question. So pretty much what he's saying, if I'm understanding him right, is that the squeeze here in January, so these three fractals here, the squeeze is not part of this fractal, these three fractals, which he's right, it's not. This squeeze is not. The macro, this was the fractal break. Let me see if I could find this. Oh, right here. This right here in January, this gap up, was the fractal break. So all of this is part of a macro fractal, and then your breakout and your retest right here, this is the fractal break. This is when a new macro fractal begins. This gap up right here, which takes you into your squeeze, and then you play out the rest of this. Right? Now, this is a macro fractal now, the squeeze here. Then you come back down and play all of this out. This is another macro fractal. And then it reset, it broke right here, and reset back into this again. So this is a new macro fractal here now. Now, basically what he's saying is that is it going to play out the same way as we saw back here? The squeeze. That I don't know. What I do know is that up until the point when we squeeze, it should play out the same. So, this is tracking perfectly. We have the breakout and the retest here. Same thing here. We have the breakout and the retest. Once we come back up to 650 and we gap up to the top of the tri-peak, the fractal break, as we saw back here, after that, it could play out a lot of different ways. I mean, this theoretically could be our MOAS. This could actually be the MOAS. That's definitely on the table. So it could play out differently. And, I'm not going to get into the peaking scenarios right now, but the two scenarios that I pretty much have is $140 target based off of macro Fibonacci extensions. And the other scenario would legitimately be MOAS, which we're in the environment for it. I think it's definitely a possibility. It's definitely on the table that we MOAS now. But I hope that answered the question, what you were asking. Should we really expect the squeeze to play out the same as the past if it's not part of the fractal? It probably won't. But, all you could do is make correlations with that. And the OPEX dates, I think they can't be ignored. I mentioned this as well. Both squeezes landed 7 days post-OPEX. January and June both landed 7 days post-OPEX. So there might be some correlation there. I find it hard to believe that would be a coincidence. So, and he had one other question being, if the original squeeze was just a predetermined algorithm blowing up and not the Wall Street bets community / retail driving up price, then why did the stock tank so hard when the retail buy button got removed? So to answer this, and this would just be a theory, this was probably never supposed to happen. And I went over this in one of my previous videos as well, where the meme basket in general was not performing well prior to COVID. The companies were already not, and take this with a grain of salt. This is just a theory. Obviously, I can't answer this with 100% certainty, but these companies were already not performing well. COVID hits, lockdowns happen. Now you can't even go to the movies if you want to. So Wall Street is like, okay, let's fucking short them to the grave. It's free money. They're not making any money. The business sucks. We'll just short it. We'll try to drive them into bankruptcy. Your Wall Street bets and retail catches on, and they start buying the stock and holding the stock and never fucking selling it. And now Wall Street has a problem because now they're short, theoretically, billions of shares. And who's holding them? Us. And we're not selling them. So they're trapped in a position. So the buy button removal, in my opinion, I've said this before, this squeeze here in January theoretically could have been the MOAS. But, the market is computerized and it's all algorithms. So rather than just letting this get out of hand here, what they did is they just redirected orders to dark pool. They took the buy button away, so they stopped any buying pressure coming in during the squeeze. Any FOMO pressure during the squeeze, they get rid of that. and they just start directing orders to dark pool, and the algo just starts trading this on a loop, which is exactly why my theory works. It's why this makes sense. It's why we're tracking perfectly, because when you buy and sell AMC stock, it's not affecting the stock price. It's just going into dark pool, and there's just billions of, the buy pressure's there for all these stocks. GameStop, Bed Bath Beyond, Microvision, AMC, everything. The buy pressure is there. It's in the stock. It's just not in the stock. It's in dark pool waiting to be pumped into the stock. When does it get pumped into the stock? When we finish playing out the macro, which we're in now. We just broke out and retested. We're almost done playing out the macro. So I hope that answered your questions. This video is getting kind of long now. I'm already a half hour in, so I'm just going to cut it here. Hope that answered the questions. Overall, the market is fucking bullish. I don't care about the news. I don't care what you think about the fucking news. The market's bullish. SPY looks amazing. AMC looks amazing. It looks like the bottom's in on AMC, and we just confirmed the retest of a macro breakout. So with that being said, enjoy the rest of your weekend. I'll catch you guys next week. Let's see some fucking green next week.